Hello, everyone. Welcome to another market update. This is the video where I go over the past month's local market data, and I'm going to try to keep like these ones that I do the in between months of the quarterly ones as short as possible. So, what do you say we go ahead and get started? So to give you all a quick summary, this is for those of you that have the short attention span and don't want to watch the whole video. This is a sort of a summary of what I'm going to be presenting during this time. That is one, seasonality has returned to our market. So during the height of COVID pandemic and all the craziness of 2020, 2021, and even mostly 2022, there really wasn't much seasonality. Sales were kind of just crazy all the time. Prices were going up, up, up all the time. So there wasn't really that kind of up and down that we see during certain seasons of the year. Well, that has returned. Um, our local market is currently at a low risk of a downturn because, quite frankly, we are still more affordable than most markets outside of Tennessee. Mortgage rates are down, which has caused mortgage applications to go up. Pending sales are below last month, but still higher than last year. So while we have seen a month-to-month drop, we're still trending higher than last year, and I think that's because those rates this time last year rates were going up, whereas right now rates are going down. Inventory is the highest it's been since 2019, but it's still almost half of the pre-pandemic levels. Sales are near 2019 levels, and even close to where we were last year. Time on market has increased by 4 days. That's right, you heard me, 4 days. And sales prices remain strong, up almost 10% from last year. So what do you say we go ahead and take a look at each one of these points individually? So seasonality has returned. This graph shows the count of monthly home sales for pre-pandemic years of 2018 and 2019, comparing them to this past year. So this year is following a similar pattern to those years, which is illustrative of a return to seasonality for home sales. So you can see that curve is very similar to, forgetting what the actual numbers are, but as far as what that line looks like, it looks very similar to pre-pandemic years of 2018 and 2019. Same years, but now we're comparing monthly median residential sales prices. So I know this doesn't look the same, so let's compare the percentage of yearly median sales price. And so this allows us to compare the monthly variation better. So basically this graph says, okay, for 2018, what was the median sales price for the whole year? And then takes the monthlies as a percentage of that. So we can see how each month is maybe higher or below what the yearly number was. And so you can see when we do that, we can see that there is a return to seasonality here, that the monthly variation curve is following the same as it was in 2018 and 2019, which was pre-pandemic. And it also, however, it's not perfect because we are starting and ending the year with more extreme differences than those pre-pandemic years. So here is one departure from seasonality. So prior to the pandemic, there were smaller variations in inventory levels throughout the year. You can see the significant gain we've made this year. However, we are still well below 2018 and 2019 levels. So there's still a big gap, a big difference to make up to return to normal inventory levels for our region. And keep in mind that 2018 and 2019 were still sellers markets as well, just not as extreme as 2020 and 2022. So you can see while we've still got a lot of ground to gain, just to get back to those levels, even at those levels, we were still in a seller's market. So let's look at the low risk of local downturn. Don Fenley, who's kind of a local economist, publishes a lot about the local market, and this he actually published today. So I actually changed up what I was going to say based on what he said today. So here's what that looks like. So, although the local market struggles with affordability issues, home prices here are a bargain when compared to markets outside the Northeast Tennessee and Southwest Virginia region. So, high-level takeaways from the analysis, he's talking about it in the Adam data. Sullivan has the best affordability in Tennessee, which is based on the percentage of income homeowners are spending on housing. The recommended level is 30%, and in Sullivan County, they're spending 24.4%. Washington County owners are spending 36.1%, which actually is still really low for the state of Tennessee, but also for the country. Both of the local counties ranked in the middle of the analysis for underwater properties. Just 3.4% of mortgages were underwater during the third quarter for each county, and the spread of foreclosures is wider. So Sullivan County has 32 filings, which is just 0.04%, while Washington County has 17, which is just 0.03%. So, in a separate report on foreclosures, Adams says there were 46 new filings in the Tri-Cities region in November, which is actually down from last year. So these are reasons why our local market is so strong that even though prices have gone up, I'll show you later, 67% over the last 4 years, we are still way more affordable than most other areas of the country, which is why we still have people not as much as we had over the last 2 to 3 years, but there are still people choosing to move to our market from these other higher priced areas of the country. Um, so mortgage rates are down. Sorry, get a little. So as you can see on Mortgage News Daily, this is the graph of mortgage rates over the last for this whole year. So you can see they've steadily climbed up to 8%, and they have been dropping ever since. The current rates, this was pulled these this morning. This is kind of one of those averages, national averages, and also looks at averages from several different sources, is around 7.09% for a 30-year fixed, 6.5% for a 15-year fixed. You can see what those payments look like for a $250,000 loan amount there. And also from an article on Mortgage News Daily by Jan Swanson, she says that not only were mortgage rates down, but applications were up. So you can see that borrowers took advantage of the lower mortgage rates again last week, seizing the opportunity, especially for refinancing. Volumes were increased 7.4% on a seasonally adjusted basis compared to the prior week, which was 6% higher on an adjusted basis. So refinances, so those rates coming down. So there's plenty of people that bought at 8% plus earlier this year. Now that it's down almost a full percentage point, probably from where they started, they're starting to refinance those to get into a lower payment. And as you can see, that was 27% higher from the same week 1 year ago, and the refinance share of mortgage activity increased to 39.2%, the largest share since March of 2022. So as far as our local market statistics, so again, I promised I would try to go through these fast, so even those of you that want to hear all of it don't have to spend forever watching this video. First, again, local inventories are higher than the previous 3 years. However, they're still well below 2019 and what would be considered a balanced market. The reason for the sharp drop in the balanced market estimate line, you see that red line that was kind of trending a little bit and then just took a steep dive. Well, that's because at the same time that inventory was increasing, sales were decreasing, as we'll see here on the next graphic. So home sales have been trending below previous years for most of 2023. However, we are ending closer to 2022 and 2019 level. So you can see that's why the amount of sales needed to become a balanced market changed, because the monthly tally of sales dropped during the same time. As far as pending listings, so you can see that Pendings has kind of been a little bit trending more towards 2022 and 2019. You can see we've kind of been going above 2019 levels, going below 2019 levels for what you can see there. But it's been kind of a mix of the previous years. You might be asking that why have closed sales not mimic the pending sales, since pending sales are homes under contract waiting to close? Well, that reason is simple because there has been a slight uptick in the number of contracts falling through. So those are for various reasons. Some are the result of interest rates climbing fast earlier this year. So that resulted in many buyers being pre-approved for a certain loan amount, but then unable to qualify for that loan amount on that house that they made an offer on because the rate had gone up on them. Others were a result of buyers and sellers unable to come to terms following a home inspection. So buyers wanted some things fixed, sellers weren't willing to do that, and they weren't able to make a compromise on either side. So the contract just fell through, and some also are just for some absolute unknown reasons. Now, if we go ahead and look at the number of new listings entering the market, you can see that that number has been trending pretty much below previous years for a while now, for most of the year. However, we have seen with interest rates dropping, um, sellers wanting to sell for various reasons. So some of the ones that just wanted to sell because either they wanted a different house or maybe they wanted a bigger house or smaller house, they were just holding on to it because they had a super low interest rate, and they what they would want was not in the realm of what they could afford based on the 8% interest rate. But we're starting to see some of that soften, and some of those people come back to put their homes on the market so that they can move into a different home. But again, it's still we've gone from below 2019 levels to kind of returning to 21 and 22 levels here as we climb out the year. So we're finished out the year. So we'll have to kind of see how that trends into next year. But one thing I can guarantee, if rates continue to drop, we're going to see a lot of shift in these graphs because there's plenty of buyers on the sidelines waiting for mortgage rates to drop to go out and buy, plenty of sellers waiting to list their house for till when mortgage rates drop so that they can afford the house that they want to move to. So lots of different things are going to be at play there. It's going to be interesting to see how that all works next year. So as far as the average sales price, you notice that those prices are still making healthy gains. Despite the amount of homes selling below asking price, in November, prices were up 9.1% from last year and a healthy 67% from 2019. So that's a lot of gains in equity for local homeowners, which is one of the reasons the rates of underwater mortgages and foreclosures are so low in our region. Most homes are sitting on a ton of equity, and most people refinanced or bought at lower mortgage rates than where they currently are at. So a lot of people are sitting in a nice place as far as their mortgage and their home, which again is why the number of underwater mortgages and foreclosures are so low in our region. We look at the median price change, it's up 9.17% from last year, which it's been up every month this year when compared to the same month in 2022, which indicates a continued upward movement of the overall home values for our region. So as this median price change, if you look at the bell curve, the whole bell curve is moving up when something like this happens. And so what we're seeing is overall home values continuing to increase in our region. And a little bit of anecdotal evidence there is, I've had some recent buyers that unfortunately were only able to afford anywhere from like $50 to $70,000 for a home, and unfortunately, we just don't have that anymore. In our area, that price is basically for a fixer upper, a small fixer upper. You're probably looking at 120, 150 ish to get into a quote unquote starter home. That probably in itself still needs some work, but at least it's livable. So that's an unfortunate thing for our area, but it's just representative of how the overall market has completely shifted higher. So that's it. So, like I said, tried to make this short so that you would get the information you need, but not have to watch a 30-minute or hour-long video. So keep in touch. Um, we'll Josh and I are going to be getting together for a year end analysis that we'll do in January. So keep an eye out for that, and also just keep an eye out for all my other videos and information. And always, as always, if you're looking for the services of a real estate agent, I would absolutely love to meet with you and talk with you and see how I can best help you. So that is it for this month. I hope that you have a Merry Christmas and a very Happy New Year. And we'll see you again next year.